South Africa's banking sector faces a myriad of threats. Two ratings agencies have already downgraded the country to junk, weak economic growth outlook, greater calls for transformation in the sector, huge amount of pressure, of course, and for the first time in South African history, 3 banks are up for sale, or certainly big stakes in banks are up for sale. Old Mutual wants out of Nedbank, and of course we've got Barclays wanted to get out of Absa, and the Caixa of Portugal wants to get out of Mercantile. This is the MoneyMakers. I'm Bruce Whitfield. I'm joined by Karl Kumbier, who's the chief executive of Mercantile Bank, to talk about the outlook. The sale of Mercantile Bank is really up to the parent company in Portugal, Caixa Geral de, I can't even say it.
De Deposito.
Yeah, Deposito. I think that's a very South African pronunciation. But we look at the environment in which you're operating, and it hasn't been this sort of uncertain probably since the Tier 2 banking crisis of 2008 that led to the huge growth of Capitec. But you survived that, and you'll survive this, no doubt.
Yeah, no doubt. I mean, in 2001, when you had the crisis, I think we were probably one of the few small banks we didn't lose any deposits whatsoever because our customers had confidence in the bank and its management team. So I think this we were going through now. It's I suppose it'll be a bit disruptive for our staff and that. But at the end of the day, unlike the other banks, Caixa doesn't want to sell, but they're forced to sell.
Because they've held a 90% stake in Mercantile forever.
Yes, that's right. We used to be listed, and they used to have about 51%, I think, in the old days, and then through some rights issues in the early 2000s, they ended up at 92%, and then we decided to delist about 5 years ago because our free float was just too small, wasn't worthwhile being listed. So they own us, they own 100% of us, and they in turn are owned by the state in Portugal, so it's a state-owned bank on that side.
So what happens now? I mean, are there buyers queuing up around the block? I'm always spying, looking over the hedge as I walk from the Gautrain station to these studios because you're conveniently on the path there.
Do you see the for sale sign outside?
I saw a for sale sign and a queue of people with briefcases. I wasn't sure if they were clients or bankers coming to buy you.
Look, Caixa, they've been basically forced to sell half of their risk-weighted assets offshore. They decided then to break it up into core and not core, and core is Portuguese-speaking countries and big market share, and you think about it, we're not Portuguese-speaking, and we got a small market share here. So they decided to sell Spain, Brazil, and South Africa. Those are the 3 banks they're selling, and they think South Africa is probably the easiest to sell, and that's why we're putting us for sale first out of the 3. And the reason why is because they've had plenty of expressions of interest over the past 3 or 4 years for potential buyers coming to say, is Mercantile for sale?
Are they domestic buyers?
Some domestic, some foreign. And interesting, different types. You'd think, is it another bank? Maybe you got from banks to insurance companies to telcos to retailers. It's a whole spread. So it's actually very interesting.
But what's interesting also is the fact that Nedbank and Absa are up for sale as well. I mean, in that environment, sure, it raises interest, but it also dilutes the opportunity for an easy sale when you've got a big stake in Nedbank and a controlling stake in Absa up for sale.
Yeah, yes and no. I think we look at those 2 banks, they're monsters. They're huge. And for anyone to say, go and buy a 51% stake in Absa, that's a massive number for anyone to digest, any organization. Whereas us, Mercantile, we're the largest of the small banks. There's only 5 banks in the industry that are part of all the payment streams, and we're the 5th. So
what is a payment stream?
Like a credit card, debit card, foreign exchange, mobile banking, internet banking. There's nothing we can't offer. So whatever Standard Bank, the retail bank offers, we're able to offer. So if you look at that, we're a fully fledged bank. We're profitable. We've been growing. I mean, we bucked the trend the last 2 years. We've grew 20%, over 20% our profits, our lending, our deposits. All of the line items last year. And the first 4 months of this year, we've grown at more than 20% again for all of those line items. So we're on the right path. And if you look at our capital, our net asset value at the moment is just over 2.2 billion. So for someone to write out a check for 2.5 to 3 billion rand is not a big number. So anyone wanting to get into banking at the moment is a fantastic buy if you think about it, because here you get a fully fledged bank for a few billion rand compared to trying to spend 100 billion on one of the big banks.
The regulators of the Reserve Bank must be a little bit apprehensive about this, because we know that there's a deep desire by families in South Africa, by various interest groups in South Africa, to own access to financial services. A political hot potato. And if there is easy access into the South African payment system via a Mercantile, you're the most vulnerable to somebody with intentions that might not be entirely honourable.
I mean, you can say that, but I mean, let's first take the process we've got to follow for the sale. Because it's state-owned in Portugal, it's got to go through a very transparent process a bidding process for the sale. which entails a whole lot of people putting an expression of interest together. Then you go through a phase where they filter out between the investment bankers, our board, and the Caixa team. They'll filter out the people we think will never get through the process. Who won't fit the fit and proper assessment, won't meet that. They don't have the balance sheet to be able to buy the bank, etc. And then once it goes through a rigorous process over about a 6-month period, it'll then have to be they'll present who they think is the right bidder to the Portuguese government, and they'll say approve it. And then from there, it's got to go to the Reserve Bank for approval. Now, the Reserve Bank will take up to 6 months to approve a transaction like this. And the reason why it takes so long is they do a proper fit and proper assessment of every single shareholder that's going to be involved in whether it's a consortium or just maybe it's one shareholder. They do their homework thoroughly to ensure that they sustain stability in the banking industry, where you don't have someone that's an undesirable, suddenly entering the banking industry by buying a bank. So that'll have to get, and they must say the regulators, when we must be one of the most highly regulated banks or industries in the world. Think about it, in the financial crisis, we didn't have an issue in South Africa because we're so highly regulated. So I think they'll do a good job of that.
You read the banana skin survey, if they're still published at PwC. I mean, they come out with the regular banking sector surveys, and one of the biggest complaints of chief executives is, there's too much regulation. But it's precisely that regulation that provides the protections that the South African financial system enjoys. Are you frustrated by regulation?
Look, regulation, I mean, you need it. There's no doubt. You need to at the end of the day, you're taking depositors' money, so you've got to make sure you're highly regulated so that depositors know that they feel confident they can place funds with the bank, so it helps you grow the bank. I think there is a hell of a lot of regulation that's been implemented all the time, and it's not just from the Reserve Bank. It'll be from the FIC, it'll be from POPI, from PCI, the card industry. So I think that's I suppose the biggest issue for a small bank is you can't, from a compliance point of view, you comply or you don't comply. In order to comply, you still have to have a team of compliance people. You still have to go and check this. Your systems have to be compliant. So the cost of compliance is huge, and that's why I think if you look at the small banks, cost-income ratio is always about 5% higher than the big banks.
So you're sitting at what, 60, 61%?
Yeah, we're probably on about 63%,
okay.
And which is right for the small banks. Big banks probably on the 55, 56. And that's why also this whole process might create an opportunity for some consolidation for smaller banks in the industry, because I think there's a need for it, because the cost of regulation and the cost of running an IT system, a core banking system, is huge. It's massive. And so you might see that happening in future.
I mean, could we see Capitec and Mercantile tie up and them get more of a business banking focus? I mean, that's a logical direction for them to go in.
Yeah, look,
You've got the expertise.
I don't know what the strategy is. I mean, it could very well be, but I think at the moment, they're a consumer bank. Whether they want to go into SMEs, I'm not sure. And I think they have made it very clear over the past few years that they're concentrating only on South Africa, only on consumer banking, because that's what they do well. And they're still opening 100,000 accounts a month, whatever.
It was something crazy. It was north of 100,000, 150,000 their best month. I think it was February this year. And those people are coming from somewhere. And you also, I mean, you're acquiring customers when somebody gets grumpy with their established bank and they leave in a huff. They come to you. Or maybe their established bank's not willing to take the risk. Are you up for some risk at the moment?
Well, look, I think
running a bank in South Africa is risky.
I think it's a very important point. And the reason I think Capitec's done so well, and it's a fantastic success story, is because they entered a segment of the market that's very badly serviced, being the low income segment. Now, if you look at private banking, you can't compete with, say, the Investex and maybe the RMBs. In corporate investment banking, you can't compete with the Big Four. But we really believe the one segment of the market that's still very badly serviced is SMEs. You speak to anyone in their own business, they'll tell you that their relation manager changes every 6 months, they're getting bad service. And that's why we feel that's such a nice opportunity for someone who wants to enter into banking and hopefully assist us in growing. Our strategy is to be the best business bank in the country. We're the only niche business bank. We're the only bank in the country that only banks entrepreneurs. And that's why I think it's a very exciting proposition for someone to buy us.
How many customers have you got?
We've got about, or depends on how you look at it, we've got 3,500 borrowing SME clients. Then we've probably got about 13,000 entrepreneurs that are linked to those businesses. And then we've got another 10,000 SMEs as part of our rental business that we bought about 6 years ago. And then there's about 60,000 cards running off our system. And then, in acquiring also, we've got about 20,000 customers now for credit card machines.
Okay, but it's quite hard to narrow it down to probably 20 or 30,000 individuals.
Yeah.
I mean, it's probably in that sort of ballpark.
Yes, exactly.
And that's a tiny niche market, but you've kept the focus very narrow.
Yeah, exactly.
So you'll offer commercial banking to them, business banking, but you offer them personal banking to those individuals as well, and people can run their lives in parallel?
Exactly. So what we totally unique is that we'll look after both your personal and your business side. So you'll have one relationship manager who looks after your business, and that same person looks after your private. So you've got a private banking card we'll give you, you've got a personal bank account, you've got mobile banking, If you want a home loan for for yourself or your spouse or your kid, you phone your one relationship manager, they'll sort it out. If you want to buy a commercial property, you phone that relationship manager. If you want to
how do you keep those relationship managers happy? Because it is a very fluid environment. You alluded to it earlier. People who are in that space will complain precisely about the high churn and the huge number of clients that, especially the larger banks who try to dip into that market to take on RMB and Investec, holding on to great people is the one big trick.
Well, that I think is the core to our strategy. So we said, good few years ago, we looked at our culture and said we want to create a culture that the core to the culture is the old, funny enough, Portuguese side of being very strong on relationships, right? So we decided we want to be really good at that. We want to spend a lot of money on our staff through training and through creating a nice working environment, creating a nice opportunity for people to grow in the business. And I must say, over the last few years, it's paid huge dividends for us. I mean, our staff turnover rate last year was about 6%, and the industry must be 18%. And this year, it's looking like it's going to be 2%, for voluntary leavers. So it's just telling you that we're able to to retain our staff. We also did a staff satisfaction index called the Gallup survey, and 13% of staff worldwide are engaged in their businesses. We spend a lot of time with our staff telling them this is a strategy, this is how you fit in, this is what you have to do in the business. And our engagement stats were 76%, which is like unheard of. So I think it just tells you it's a small organization, but it's actually, we've got a fantastic team of people and a great culture.
Does it worry you at all that you might be bought by a bigger player who wants to grow you and says, okay, this SME space, this is where we want to be, this is where we want to invest, we're going to double the size of this business over the next 5 years, which is feasible in an environment where there's a bit of growth, and depending on our politics, that is possible. You kind of lose some of that charm. You lose some of that ability to be nimble, that ability to keep your people focused.
Yes and no. I think we can comfortably double the size of this bank without having to spend any more money on infrastructure and without having to spend on systems, processes, etc. So we've always seen we don't think we never want to be a big bank ever, right? So with our market, if we can double, even triple the size of this bank over the next few years, you've still got a small market share, but you'll still be able to have that personalized service, flat structure. The person can pick up the phone and speak to someone when they've got an issue. So we're very comfortable we can easily double the size of the bank without having a problem.
And who's the buyer?
We'll have to wait and see. The process officially will start in June, and then we'll find out from 6 months from there, I think.
Okay, we're looking forward to that. Karl Kumbier is the Chief Executive of Mercantile Bank, diagonally across the road from the Gautrain if you're looking for him. You can bank on the show, bringing you more big stories and more cutting-edge stories in the near future. But for now, thank you so much for watching. Good night. The third Discovery Financial Planning Summit is taking place on the 29th of May 2017. It features some of the world's industry-leading keynote speakers in the field of financial planning. The summit will address key trends facing advisors in 2017 and beyond. Financial planners have a more pivotal role than ever to play. This full-day event offers you the opportunity to hear how to embrace technology and more effectively connect with your clients, gain insights into global investment strategies, and get a better outlook on markets. Please go to www.financialplanningsummit.co.za to register for the Discovery Financial Planning Summit.